Hey, what's going on, everybody? My name is Fernando Corona, and me, along with my wife and our now 17-month-old daughter, have been in real estate investing for the past 2.5 years. And today we are going to be getting into how to finance investment properties, whether it's in-state or out-of-state, without a W-2, without proof of income, without your tax returns, none of that. You're still going to need some things, and we'll get into it a little bit of what you're probably going to need, and depending on who you go to for this type of loan product. But for the most part, it's an amazing product. I'm an entrepreneur. When I found this baby, I said, ha, to everybody that told me, if you leave the W-2 world, you'll never be able to get financing. Well, we showed them, and check this video out as we get into how you can too. Okay, so why am I even making this video? It all starts with the problem that I had and that everybody used to tell me, hey Fernando, if you quit your job, you will no longer be able to buy a house. And for me, it's not like I wanted to buy a house for me to live in, but I wanted to buy properties. And so I was determined to figure out a way to buy properties without having a W-2. And through that short journey, actually I won't say short journey, we bought 2 properties with a W-2, but throughout that whole process, I ended up connecting with a lot of lenders and a lot of banks and figuring out that there's a product out there called the DSCR Loan that allowed entrepreneurs like myself or investors to be able to scale to 100 properties or more without ever showing my tax returns or showing proof of income, none of that stuff. Now, we're gonna get into it. You do have to show like 2 months bank statements. There are some qualifications. This isn't like a no docs situation, but this has allowed us, me and my investors, to get into properties in a way where none of us have to be personally liable. We're able to buy property, under an LLC. We're gonna get into the details. So what is a DSCR loan? I'm gonna explain one way. It's a loan where instead of the lender qualifying the individual, it qualifies the property. So again, instead of the lender qualifying the individual, the lender will qualify the property. Does the property generate enough cash flow to cover all the debts of the property? Yes or no, right? And the lenders or the banks are going to explain to you their formula for debt service coverage ratio on how to figure out if your property qualifies. So let's get into a few of the benefits of a DSCR loan. So the first one, no W-2 required. The second one, no tax returns. The third one, no proof of income. The caveat to that is you will need to show 2 months of your bank statement, and that's just to show whoever you're getting the financing from that you are liquid, or that you have, you could show your statements from your brokerage account just to show that you have the money in one of your assets in your account. You could show a HELOC. They just want to see not proof of income, they want to see proof of funds. Do you have the capital for the 20% or the 25% down? And then they just want that to be seasoned for 60 days. Whether that's you or you're working with an investor, they're going to check one of you has to qualify in that regard. This is considered a commercial loan. It's not considered a residential loan. Because it's considered a commercial loan, the property goes under an LLC. I personally see this as a benefit because nobody has to be personally liable for the loan, meaning it's not going to show on your personal credit score. It's not going to show you have these more property debts on your personal record. If you're partnering up with investors, again, nobody has to personally carry that loan and their credit score. The LLC carries the loan. You and your investor become partners of that LLC, and then that's how you'll start acquiring the properties. So that is one of the nice benefit. The other one is credit scores. Maybe with FHA loans or like some other types of loan products, you can get pretty low. When it comes to a DSCR loan, some lenders or banks can go as low as 620. Now your interest rates are probably going to be significantly higher. I think that people would say that's one of the cons of going a DSCR route, is that you're going to have a percentage or 1.5% higher than if you went a conventional loan route. But if you think there are more benefits to a DSCR loan and you're watching this, drop them in the comments. I don't know everything. I'm just trying to share what I've learned so far so that you guys can benefit. Going back, exactly what is a DSCR loan? How do you calculate if your property will qualify? Net operating income divided by the debt that you have to service. So that could be like your mortgage, your insurance, and your taxes on the property. You make $1,000 from your property, and the debt that you have to pay, which is your PITI, principal, interest, taxes, and insurance, that is $1,000. So 1,000 divided by 1,000 is 1. So your DSCR, or your debt service coverage ratio, is 1. There are some lenders that will actually loan to you at a 1.0 DSCR, debt service coverage ratio. There are other lenders who will say, hey, no, you need a 1.2. You have to look at the ratio again. Now you have to increase your rents to $1,200. But the market, the way they do that is they have to send an appraiser. The appraiser goes to the property or checks out the market and says, in this area, it can get anywhere between $800 and $1,200 a month. That appraisal comes back with the rent, and then your lender says, okay, cool. If you rent it out for $1,200, your property will still qualify. Again, $1,200 divided by $1,000, that's 1.2. And so your property will still qualify. There are other banks out there that are a lot more strict. So definitely interview banks, interview lenders, interview brokers. I talked to a bank once, just very strict DSCR, where they had to subtract like lawn care, property management fees. They're just really getting to that net operating income. So like they're chopping and chopping and chopping. And even if you're doing something creative like Airbnb or pad split or something, right, some midterm rental, they're still possibly going to go off the market rents, even if you're getting significantly more. So it's just something to be aware of. And there are lenders that will give you a DSCR loan off of an Airbnb income. And so again, those are different lenders who possibly take on a different risk than your typical bank. And I'm talking like your typical bank. This is where you have to get creative with your network, because there are lenders who will lend DSCR a little more leniently, I would say, than a Chase, Wells Fargo, or all these other bigger banks. So if you're an investor, get connected with lenders in your network. They probably know about these types of products if they work with investors, and then you just got to interview them and you just got to talk to them and figure out which ones are going to be right for you. They're going to have different interest rates. They're going to have different point structures. Again, the different DSCR ratios that are required, 1.0, 1.1, 1.2, how they calculate the net operating income. I'm trying to share as much as possible here so that you can go after watching this video and just start talking to lenders, knowing what questions to ask. The last thing I'll say when you're talking to a lender is ask them what your loan to value ratio is on the DSCR loan on both a purchase and a refi. Sometimes I get caught where if I go to purchase a home and it's an 80% LTV, in my mind, I've made the mistake of thinking that if I want to refi, I can get the same terms. That's not the case. So if you're new to investing, you always want to ask, what are the terms for a purchase and what are the terms for a refinance? So if you have any specific questions on the DSCR loan, drop them in the comments. Go ahead and follow me at It's Fernando Corona on Instagram or TikTok. And I'm happy to, chat in the DMs, have a longer conversation with you guys. If you found any value from this video, please like and subscribe. That helps me create more videos, get excited, it gets my team excited, the editing team, shout out to Vina, and we can go and create more content for you guys. Share it with anybody in your network who you think could benefit from this. Share it with your lenders. Let me know if you're a lender and everything or anything I said is correct or incorrect. I'm never the one to think that I'm always right and that I know everything. So if you have more information that's valuable to anybody to watch this video, drop it in the comments. Happy to have a stronger conversation with you guys. I'll most likely be creating a video on how we financed our property with hard money and then refinanced into a DSCR loan. I think that'll be a fun case study to share. So please like and subscribe, and then I will go ahead and create that video for you guys. Thanks again, everybody. If you've stayed and watched up until now, super excited to continue to create content for you guys. And we are looking for investors when it comes to pad split. Pad split is a rent by the room model. I think pad split is going to be the next Airbnb over the next 10 years. If you're interested, there will be a link in the description that kind of goes over that pad split strategy. If you're looking for passive income and looking for a solid real estate strategy to invest in, watch the video, reach out to me. We can talk about how to collab in real estate, or worst case scenario, you learn something new and you find out it's not the strategy for you, which is totally okay. So for all of you watching, good luck. Have a good day. See ya.